Hello traders out there in Traderland. D7 here with Grok Trade. It is the weekend edition. Good through Sunday, September 1st, 2019. And it's a Saturday morning. Just getting started here. Markets ended the day Friday in mixed territory. A couple things that grabbed my attention was financials doing the best, up 0.34%. Nasdaq lagging the most, down 0.24%. If you drop down here, crude oil drops 2.7%. We're at 11.46 on USO. Really interesting there. Gold and silver split. VIX, though, it's 19. We're up 6% plus. VIX did increase quite a bit at 19. Bitcoin hovering below $9,600. All right, let's take a look here at the S&P 500, the Spider ETF. And down here is my monthly, or I'm sorry, my daily. Up here is my weekly, and here's my monthly, just so you can get it. And you can tell by, see 1D, 1 day. This is week, and this is 1 month. You can see that there. And I'm using TradingView. There's a link down in the description on the software that both Mark and I use. All right, on the daily chart on the S&P 500, which is by far the most important index we look at, we are in an uptrend. Higher swing highs, higher swing lows. We're in this channel going higher. We did break out of this small little trend line Thursday, Friday. We come up. I can see it relaxing a bit here. But it has a lot of upside opportunity here on the daily chart, and that's contingent on the price action staying above this trend line. Excuse me. Coffee is good. I grind it myself. We grind it. It's great. But I want to look at the weekly. The weekly was in a rising wedge. It broke down out of the rising wedge, and it had a bearish divergence on the MACD oscillator here. We broke down from this trend line, and now the trend line is acting as resistance right here. Do you see that? This is more bearish than it is bullish. Again, this is the weekly chart on the S&P 500. You can see that the spiders, and you can see W for week. If you haven't followed us before, feel free to hit subscribe, hit the bell so you get notified on our videos. But this is weaker. The only way for this to get bullish again is if it gets back above this trend line. If it gets back above this trend line, this will be called a jab. This could get bullish quickly, but right now it's more bearish. The weekly is more bearish. Now I want to go to the monthly. See, the monthly is over now, right? We closed out of August. If you notice, we also are in a rising wedge, but we're at the resistance point of the rising wedge. Big bearish divergence on the MACD. What's interesting for this month is when we hit resistance right there, August should have dropped, and it did. It dropped lower. But what's interesting is it rallied back, meaning that the bulls got bullish. The bears couldn't keep it down. Just like when we hit the resistance here, we dropped. We should have had this candle right there, but we didn't. It came back. So that's telling me that the market is trying to break down, and it wants to break down, but there's other forces keeping it higher. That's what it looks like to me. But are we in a rising wedge? Yes. Are we at resistance? Yes. Are those both bearish? Yes. Do we have a bearish divergence? Yes. Is that bearish? Yes. On the monthly chart. That's bad, right? So we are bearish, even though we're going higher. That's bullish, right? We are bullish. All I'm saying is our indications for future movement is set up to go bearish based off of technical analysis that we're seeing here. So that's the monthly. Again, the weekly is up here. We broke support. Now that support line is acting as resistance. The daily, it's chopping around here. It's caught up in the moving averages, but it's in a channel that's going higher. So it's something that we're watching really closely. If we go to the diamonds, same thing here. Diamonds and S&P look very, very similar. This is the daily chart. If we go over here to the weekly chart, the thing that's different here is we're at support. We're at support and we're bouncing higher on the weekly chart. That's actually more bullish. This is still a rising wedge, and we do have a bearish divergence here. I'm going to signify it with a trend line. Whoops. Bearish divergence. Again, that is a weekly chart. If you go to the monthly chart, we're in a big time rising wedge. We have a big time bearish divergence. But what's interesting, we broke above that line. That is interesting to me. And on the monthly, we went down, 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 came right back up. Could it keep tracking up here? Yes. It would be really bullish if we close above this blue line. Then if we bust above these blue lines on the monthly charts, we're just forget all about these bearish indications that we're seeing. Now, Nasdaq and Russell's 2000, this is a different ball game, okay? So this is the daily chart on the Nasdaq. If I pull in some data here, we have this big rising wedge, and we have support that goes back here December 21st 2018, and then this right here June 3rd 2019. But we come up support broken. It should have dropped and crashed and burned. It happened on big volume. Let me zoom in so you can see this. It happened on big volume. It should have kept going down. It rallied back. That's a jab at support, so that's a area that tells me that this could rally higher. Okay, normally when you punch through an area, that should fall apart, especially with confirmation of bulls and bears with high trading activity, and it reverses and goes right back up. That's a jab. Look for it to reverse to the upside. We're caught up in the moving averages on the daily chart. Again, this is the daily 1D daily chart, and we're hovering at the support line, not at the resistance line. So that's got a little more bearish activity to it. But this could also be a bear flag. For you guys who are more advanced, you got the big drop, you got the wavy flag here. This could break down, but I think the odds of that happening is lessened just due to the jab that we got here. And that's a little more advanced, so I don't want to get too geeky on you. If you go over here to the daily chart, or weekly, what am I doing? Man, Des, that's my name, Des. Take another drink of coffee. We're up. We're coiling at an area of resistance. On a short time frame, if you drop on the weekly, you get this low base, so that's bearish, right? That's bearish. Or even a very compact like little pennant, and so I could see a big gnarly red candle stick here going into September. However, we did close above the 20-week moving average. It is trying to go higher, but overall this formation on the bigger picture is we're in an uptrend. We're going up. Moving average is going up. On a more micro on the weekly chart, we dropped and we're staying low of this leg. So that's not great. Furthermore, we have a bearish divergence on the weekly. So it's showing me bad things. Here's the monthly Nasdaq. What's interesting here on the monthly Nasdaq, we do have this bearish divergence, but it broke the line. Do you see that? That's interesting. We dropped, we hit, we dropped, we hit, and then we dropped. We should have dropped another big red one like this one or this one. Those two red ones, very That's what should have happened there, but we went down, we came back up. That shows me some bullish activity. Like, whoa, what's this thing wanting to do? Is it going to break above this monthly line? If so, all these bearish indications, stick a fork in them. They're just done. They're just done. But this is looking quite strong. Let me go to the small caps. This is the Russell's 2000. It's usually this is a leading indicator, okay, as far as the indices are concerned, because they're small caps, and in the financial world, small caps are more risky. They're riskier. Why? Because they have lower liquidity, and they're easier to move with less liquidity or less trading action. That's the long and short of it. So the idea is in a market that seems to be topping out, you want to get rid of your riskier stocks. So that's usually your small cap stocks, which are found in your Russell's 2000. That's why we like to look at it. If you look at the Russell's 2000, since August of 20, wait, what am I looking at? Yeah, it's daily chart. Yeah. Since August of last year, this thing has been trending lower. That's not a good sign. For the last year, we're showing this under distress. Now, if you zoom in a little bit, we go up. We got a big bull flag here. This bull flag could pop. If it pops, that means it needs to break over this on the daily chart. If it does that, man, the markets hasn't given up the ghost yet. We're still going to go higher. Very important that we watch this right here. Can we get over that line? If I go to the weekly chart, I always like to see what the higher time frames will show us. Bring in some data. We've been going up, but since August, September of last year, we dropped. And last year, as soon as we got into September, we had a nosedive. Will that happen again? Maybe not. Excuse me. Maybe not. But on the weekly, we go up. We got a bull flag. You know, one thing that I want to look at on this is the Fibonacci retracement. Just want to see, as long as we stay above 61.8, but right now we're staying above 50%, so that's good. This thing could get bullish, guys, even though we're below the moving averages. Just watch this. We could see an about face that takes place with the Russells. Russell's 2000 is the indicator to watch right now. Let's see if this starts to break down or if it pops. If it pops, that could tell us the way of what's going to happen next. Let's go to the monthly chart. Financials will show. I'm really interested to get into the financials with you. The monthly just looks pitiful. If you look here at the monthly, we were good until last August, September, where we're at right now this year. We drop. We come up, but it's just petered around here below 160. That is not good. We need to get above that 160 mark. We need to release and start heading up. This is showing me relative weakness on the monthly chart. So wow, going back, it's just been weak for the last year, really weak for the last year. And is that indicative to what is to come? Maybe. Now the financials, all I know is this: overall, we're seeing a lot of bearish setups across all major time frames on important indices. Okay, financials will help share with us either the support we have in the marketplace right now or the weakness we have to support this movement. So let's get into the financials. Here are the financials: ETF, XLF, X-Ray, Lambo, and Frank. If you look here, we're caught up in sideways consolidation. This is the daily chart. daily chart, we're just caught up in sideways. You know that when you're caught up in the moving averages. See how we're caught up in the moving averages? Look at the moving averages as sticky spider webs. Once you get into them, they're hard to get out of. We're just caught up in them, and we're predominantly staying below them right now, so it's X% more bearish than it is bullish at this moment. But we are starting to bounce, going higher. The question is, will we bounce up back to this resistance level? We have a long way to go before we could even break out of this zone. So I see a lot of consolidation and uncertainty on the financials on the daily chart. If you go over here to the weekly chart, we're in this big symmetrical triangle. And in symmetrical triangles, you can get a lot of whipsawing taking place. But here's what we know about symmetrical triangles. They can either break up or break down, and when they do, they usually mean business. So this is building strength. For you guys that use Bollinger Bands, you're starting to condense on the Bollinger Band. We're starting to condense. This could, now mind you, this is the weekly chart. If this is a weekly chart, this for many weeks we could stay within this apex and before we make a move one way or the other. So we could go into a lot of consolidation here on the financials. However, if you look here, if it does, it dropped, and it's almost like it's wanting to go back higher. If it does go higher the next few weeks and it breaks through this, then we are still bullish out there in the marketplace. If you go to the monthly, it's on the financials, a lot of consolidation, a whole lot of nothing. We're just moving sideways. I need to add my moving averages back to this. Cleaned off all my charts. For you guys that haven't watched me in a while, I cleaned off all my arrows. It was just getting too cluttered, and it's just horrible, and I didn't like it, and I cleaned them off. So if I cleaned them off of mine, you're seeing my charts. So that's you're seeing my clean charts. And for this to get bullish, it has to break out over this on the monthly chart. Oh man, we're just in one. These trend lines are so monumentally important to us going into the future. If it breaks down, this is a minor trend line right here. It could drop here, but we have this is our main one right there. If it breaks out, we're in a lot of trouble. So that's what we're watching. All right, let's get into some. We're just going to stay on daily charts now for some of these others, I think. U.S. dollar, we're in this rising wedge. We're hitting resistance. Look for that to drop, U.S. dollar. Crude oil in a big time symmetrical triangle. We're in the apex. Look for a big move on crude oil. Friday had a big sell-off, right? 2.4% and 2.7% sell-off on Friday. So this thing could start to drop here. We're at resistance. That could drop. If it breaks this, crude oil, look for that to really drop. But we're pinched. This thing could explode to the upside. I can't help myself. I got to go over here and look and see what's going on the higher time frame, weekly. So the weekly is telling me that we have a much better chance of going down. Why? Because we were in the symmetrical triangle and we dropped below it. Now it's acting as resistance. I think crude oil has more downside opportunity here. If you look at the monthly on this, you're down, big bearish pennant. So this is on a big time frame on the monthly. This is a bearish pattern, very bearish. Only way that this could heal itself is to get back over this major trend line. It needs to bust above it. Outside of that, man, I just would not want to be long crude oil right now. No. Silver, you can see monthly up and away. You can see weekly up and away. Here's the daily up. Everything looks fine on silver or gold rather. The only problem with gold, it did break down on this minor trend line, so it's showing a little weakness there. The weekly looks like it could be topping out, like it's ready to pull back a little bit. Monthly looks fine. VIX is consolidating, but this is a bull flag. Up, big bull flag. That means this thing could go boom, a lot of bearish activity to the upside. But I don't like to do the technicals on the VIX very much. Bitcoin has dropped. We're at a major area of support. That's interesting. Man, maybe look to buy some more Bitcoin. And I do hold Bitcoin. And the weekly, big high base at resistance. Look for that to break out to the upside. Wow, I mean, there's some opportunity here. We're at resistance here on the monthly. So we have a lot of downside opportunity here. However, if it pops up above, so if this daily does rally up and the Bitcoin weekly pops above this and breaks above that, look for, I mean, we'll probably be at 20,000 before you know it. We'll probably be at 20,000 before you know it. All right. So listen, I'm going to apologize, guys. I missed last weekend's video. I'm gonna be more diligent. Launching a new business. Launching a new business. Believe it or not, it's in combat sports. September 21st, pay-per-view. And Valor BK, Valor and BK bareknuckle.com. You can get information on it. But I'm the CEO. Ben, if you do research, you'll see it. I just had an article written on Ken Shamrock and myself and Forbes and some other articles. Crazy things. A lot of you guys don't see me as, like, for example, a lot of you guys don't know that I was an inside linebacker for a 4A school in Indiana. And only weighed 155 pounds. But I was defensive captain 2 years in a row, my junior, senior year. Won all team, first all conference, first team all conference, as a linebacker. And I was small, but I would find the ball and I'd hit you. I wrestled in high school, in middle school, and I also played rugby in college. So I like combat sports. A lot of you guys didn't know that. But at the same time, I was the president of the chess club in high school. Go figure, right? And never was a great student. Never was. And matter of fact, I didn't graduate college. Went to college and went to a private college, Anderson University. That's where I played rugby. And went there for fine art as an artist. Started doing schooling, and that was the mid-90s when the internet was just coming around. I was the first person in the world to come up with selling cars on the internet. I had no idea I was going to be talking about all this. Selling cars on the internet. So I started a company before nobody was selling cars yet on the internet, believe it or not. Think about a time going to the internet and cars, you couldn't buy cars. Well, that was me. I started that. I was the first. There were other people that were hot on my tail coming into the marketplace. The venture capitalists, the VCs, wanted 60% of my business. They were very interested. And I said no to them. I was undercapitalized, and I didn't do well in an emerging market. But I quit my schooling to start that business. Matter of fact, a professor at Purdue University, I went to meet with him before I started the company, and I knew this individual was somebody who taught on graphic design and got into the internet side of things, and it was all really new. But he was a cutting edge guy, and I asked if I could meet with him, and because Purdue is here in Indiana. So I met with him. He says he'd give me 15 minutes, and that 15 minutes turned into 2 hours and 15 minutes, and at the end he wanted to go into business with me. So we went into business together. But we were undercapitalized. So now we're in another emerging market. So anyway, I shared all that to say that I like combat sports. I like contact sports. I like business. I like especially business and emerging opportunities. But trading, the reason I never leave trading is because, well, let me say this. Well, you never leave anything that makes you money, right? Of course. but it gets boring. And that's going to be a jaw dropper for you guys. Does trading get boring? Yes, because you have to be really disciplined to your rule sets. So in other words, you're doing the same thing over and 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 over again. And that can be hard, man. Just doing the same thing. The monotony of it. It's like being in a factory. If you're in a factory creating a gold ingot, and after a while you're excited about all your gold ingots. Say you own the factory and you make a gold ingot and it's yours now. Wow, okay. But if you do that every day, all week long, all month long, all year long, all decade long, it starts to lose. The excitement's gone. And that's actually what we teach. We teach that we don't want there to be any emotions, any excitement. There shouldn't be. Hone in on what works. Keep doing that over and over and over again. You're looking for it's all about the reward to risk ratio. It's all about the win ratio. It's a numbers game. Just like business, trading is about the numbers. Going from amateur to professional is about looking at the numbers and being emotionally separated from your trading. That is very important. You do that, there's so much money in the marketplace, guys. So much. It's all around us, with you or without you. If you're in the market or out of the market, it doesn't matter. It is still there. It's all around you. All you have to do is get a net, butterfly net, put it out there, and grab the money. It's there. It's in the marketplace. As much money as you can imagine is there. It's there. But it's unwieldy. You have to be guided in this. I was fortunate enough to have a trader mentor me. Man, just like you're flying a plane, you need to be fortunate enough to have somebody go in the cockpit with you to help you fly, because bad things happen if you try to do it on your own. Man, yeah. There's a class. It's 3 days that you may or may not be interested in. And we try to weed you out, actually. There's a little test that we have people go through. It's 3 days online where you hang out with Mark the Meerkat. He's the only person in the world I would trust with my own money. Mark the Meerkat. He teaches 3 days. And online, so you do it from the comforts of your own home. If you're interested in that, go to groktrade.com, go to mentor, and fill out the form, and yeah. But anyway, I hope you guys are all doing well. Hope you are. And if you are still with me, say made it, I will be shocked. This is almost a 30-minute video, and if you've listened to all of this and you made it, I just want to know, made it. Say made it. Say made it. And I'm really interested to know, do any of you guys watch boxing or mixed martial arts or UFC? Do any of you guys watch it? Do you even know the name Ken Shamrock? Have you heard of the bare knuckle movement? I don't know. It's a weird mix to be here as the financial guy talking about bare knuckle combat sports. I don't mean to blend it. I probably should separate it. If you think I should keep it completely separated, let me know that too. Say, yeah, keep them separate. We don't care, Des. Or D7, whatever you want to call me. So, all right. Take care, guys. We'll see you later. Bye.